I rise to follow on the majority leader's bringing this legislation to the floor, which I'm privileged to sponsor with a whole host of my colleagues, and really to speak out for taxpayers and against continuing to provide subsidies to multi-billion-dollar big oil companies. And we're talking about the Big Five. We're not talking about any other entity, just the Big Five. A vote on my bill presents, a positive vote on my bill presents a simple choice for everyone in this chamber. Are you on the side of working class families, or are you on the side of big oil? There are lots of ways to cut the deficit. Many of our colleagues, particularly in the other body, they want to end Medicare and cut student loan programs. What I and my co-sponsors want to do is end wasteful oil tax breaks for a wealthy industry that does not need them. Now, Mr. President, clearly we all need to tighten our belts to help address the deficit, all of us, even the oil companies. We all know that oil companies are among the largest, most profitable companies in the world, but sometimes it's hard to understand the true scale of their wealth. So this chart is an attempt, just a simple attempt, to give some perspective. You know, the median income in the United States is about $50,000. ExxonMobil, just one of these Big Five, is projected to earn in profits $42.6 billion this year. $42.6 billion. Now, it's impossible to show this disparity on a chart, but if this chart were to scale and each bundle of money equaled 50,000, then we would need more than 850,000 stacks of bills to equal ExxonMobil's profits over the next year. 850,000 stacks of bills on this poster would be about 170,000 feet high, or about 32.2 miles straight up through the ceiling of this chamber and beyond the stratosphere. Now, the printing and graphics department is very good here at the Senate, but 32 miles of posters was probably a bit much, so I decided not to do that. And I appreciate the parliamentarian acknowledging that I shouldn't have done that. Mr. President, my bill would close several loopholes for big oil. Loopholes that, given the current budget climate, would let big oil get away without making any sacrifices at the very time we're asking middle-class families, the disabled and the elderly, to tighten their belts and help reduce the deficit. There simply is no common sense explanation for balancing the budget on the backs of working families and letting multi-billion-dollar oil companies keep billions in taxpayer dollars. Now, I know that at the same time that the median income is $50,000 for Americans, here's what it is if you're a CEO of one of the big oil companies. In last year alone, the CEO of ExxonMobil got paid $29 million. The ConocoPhillips CEO got paid last year about $18 million. Chevron, about $16 million. Most Americans will never see that in their lifetime of work. And so to have these executives come last week before the Finance Committee and say, as some of them, one of them, their companies put out, that the suggestion about taking away some, not all, some of their tax subsidies was un-American is pretty outrageous. Let me explain two provisions of my proposal. The first provision has to do with foreign tax credits. U.S. taxpayers are taxed on their income worldwide, but they're entitled to a dollar-for-dollar tax credit for any income taxes that are paid to a foreign government, They get that taken off here. Makes sense because you don't want to tax the same activity twice. But U.S. oil and gas companies have pretty smart lawyers and clever accountants. They have figured out that if you can convince a foreign government like Indonesia to charge you taxes instead of a royalty, which is in essence a fee that you pay for the purposes of drawing that oil out of that country, that they can get a big break on their U.S. taxes. But what this amounts to is that the United States taxpayer is subsidizing foreign oil production. This bill would close that loophole and return $6.5 billion to the Treasury. Another one. In 2004, Congress created the domestic manufacturing tax deduction. It was designed to help U.S. manufacturers who export a product to a foreign market. So cars, iPhones, iPads, all of that. Well, few would really see the extraction of oil from the ground as manufacturing. But again, big oil's lobbyists earned their money. They saw an opportunity, some made phone calls, and lo and behold, according to the tax code, oil companies are in the manufacturing business. This legislation closes that loophole and saves taxpayers almost $13 billion. That would be $13 billion more towards deficit reduction. Now, the American people understand this bill. They understand that big oil makes enormous profits, and there's nothing wrong with making profits, by the way, but they don't need to have our tax dollars in order for them to make those profits. They understand that big oil does not need taxpayer subsidies, and they understand that if big oil wants to lower gasoline prices, they could put a lot less money in stock buybacks and a lot more in lowering prices or producing more oil. But in order to combat this straightforward, common-sense bill that even the Cato Institute supports, big oil and its supporters have come up with some pretty strange rhetoric. The strangest by far, as I alluded to before, is suggesting that those who support cutting these wasteful subsidies are un-American. Seems to me when a company stoops so low as to question the patriotism of those who would suggest that, you know what, maybe you can do without $21 billion in taxpayer subsidies when you're going to make anywhere between $125 billion in profits, not proceeds, profits, to $140-some-odd billion, to question the patriotism of those who suggest you don't need a further taxpayer subsidy is really to suggest you don't have very good arguments on your side. Charge of un-American is outrageous. And I think the 74% of Americans who support ending oil subsidies know they are more American than that point of view. Another argument I keep hearing is that oil companies are entitled to these breaks. This argument seems to suggest that the wealthy and powerful deserve what they get and that working-class families should know their place and know better than to ask oil companies to do their fair share as well. Warren Buffett, one of the richest men in America, said, quote, "There's class warfare, all right, but it's my class, the rich class, that's making the war, and we're winning." This bill says that even the most rich and powerful among us must do their fair share to help us reduce the deficit. Their high-priced lobbyists cannot stop us from doing what is fair and what is right. Now, some in the industry have also claimed that cutting $2 billion in annual oil subsidies to the big five oil companies will somehow make oil and gasoline more expensive. That argument is absolutely false. This bill would save taxpayers $21 billion over 10 years, roughly a little over $2 billion per year. Compare $2 billion in taxpayer subsidies to the projected anywhere between $125 and $144 billion in profits the big five oil companies are expected to make this year. So if the big five oil companies could just live with $142 billion in profits in 2011, they could pay their fair share in taxes, help lower the deficit, and not raise the price of gasoline. Let's put it in a different way. The Finance Committee recently went through the corporate filings of the big five oil companies and found that their cost of extracting oil is about $11 per barrel. When oil is trading at nearly $100 per barrel, it is simply absurd to suggest that the cost oil companies are facing is what determining the price of oil, that cutting $2 billion per year in the subsidies will somehow force oil companies to raise prices. In addition, the nonpartisan Congressional Research Service just came out with a definitive report echoing the sentiments of countless economists and other disinterested observers, concluding that my legislation would not increase gas prices at all. So, Mr. President, it's time for the Big Five to do the right thing for a change and pay their fair share. It should not be hard, since in 2005, the CEOs of some of the big five oil companies testified that they agreed with former President Bush that they do not need subsidies to drill for oil when it's selling at $55 per barrel. Well, it's selling at nearly $100 per barrel right now, so it's quite strange that anyone thinks they need government handouts to drill when the marketplace is driving them that way. We simply cannot expect the average working family to shoulder the burden of lowering the deficit alone, and I hope some of the favorable comments I've been hearing from my Republican colleagues in recent weeks means they're ready to join in this effort and lower the deficit, because all of the saving goes directly to deficit reduction under the legislation, and do so in an equitable and effective manner. What's fair is fair, but nothing about continuing the subsidies is fair. Now, those on the other side would end Medicare as we know it in the name of deficit reduction, while continuing to pump billions of dollars in corporate welfare into a $100 billion profit industry. That's the height of hypocrisy. It's not fair to working families. It's not a wise use of limited federal resources. And if this body does the right thing today, it's not going to continue. There's nothing fair about the suggestion of ending Medicare in favor of big oil subsidies. Big oil has to do the right thing by America. They can be part and should be part of the solution to our deficit challenge, and that is the opportunity that we have today.